Hello, my name's Dominic Fonte with Cutler Real Estate. Thanks for tuning in today. Happy fall. Hard to believe we're already into the end of September 2022. I'd like to talk a little bit about what the real estate market is doing and how it will affect you. Okay, I'd like to talk about what the interest rates are doing. The 30-year fixed rate Freddie Mac, Fannie Mae interest rates. I want to show you a few slides, give you a quick overview of where we're at in the market. So as you move forward in the rest of 2022 and beyond, you know how to prepare properly. I always say an informed decision maker is a happy decision maker. So let's talk about slide one. Mortgage rates, Freddie Mac 30-year fixed rates from January 2022 to today, which really wasn't very long ago. Hard to believe the rates were only 3.22 in January, and now they're hovering in the mid fives. And when you put that into perspective, you really think about it, what's really happening? Well, it's just cutting into the buying power. But if you've been around long enough, you realize that that's really not a terrible rate. After the end of summer law, then we're going to see hopefully the rates stabilizing 5.5 is what my guess is. And then we'll see buyers returning to the market because the market is calming down a little bit, normalizing a little bit. So when you think about 20 and 21 was a ridiculous emotionally buying year where people were paying untold amount of money to go ahead and secure the property of their dreams, right? Well, now it's kind of normalizing a little bit. And possibly if you come into the market today, even though the rates are a little higher, you're going to see like you marry the house, but you only date the rate. And what I mean by that is the rates will fluctuate as time goes on, and then you could refinance down the road. One of the big things is we talk about appreciation. So the depreciation, deceleration, or appreciation. You hear these three terms, but as long as I've been in business for over 34 years, the appreciation factor hovers around 3.5%, 4%. So that's kind of what I was expecting over the time. And then the last few years, it hovered around 19 and 20%, which is really not sustainable. So now that you see the next graph, appreciation showing, not depreciating year over year, price increases for 2022. Now, when you look at January through July, when you hear the market declining, you wonder what that really means. Well, obviously, as of July, we don't have the latest numbers. It's about 15.8%. So that's where the deceleration comes in. So they're just really talking about a down click in the appreciation. So even though it's going down some, it's still way too high in my opinion. So that's just to keep you informed. And now if you look at the mortgage income ratio, we call it the DTI, debt to income ratio, the houses are a little less affordable because the rates are up 3% more. And so when you're looking at today's person looking to buy and borrow, and they look at the debt to income ratio, the average is about 25.4% of your gross income for the buying power to purchase, which is still fairly conservative, but it's an uptick from where it was, January 13. It's gone up over the years. And then if you look at the affordability of the historic low levels, now this is a housing index from 1990 to today. If you take a look at it in 1990 and you slide all the way over to today, you notice the dotted line. Well, take a look at that. And then you notice the blue, which was the distressed year. So they're talking about the affordability. The higher the number, the more affordable. So when you look at today at 98.5, it's a little less affordable since 1990 based on easier for financing, easier for affordability, but it's still affordable in comparison to, say, the 70s and 80s, right? So in closing, what I'd like to tell you is that when you buy a house, you buy the most expensive, the best house you can afford, whatever that means to you. And remember that the interest rates will change again. They always have. For the 34 and a half years I've been in the business, this is the sixth adjustment. And if you go back and look at the adjustments, a lot of times the house is still appreciated, even though the economy was having some struggles. And the Fed, of course, they've been raising the rates 75 basis points the last few times. And so we're hovering in that 5.5% range, which is really historically low. It's just a shock if you've only been looking for the last 2 years. So I would say an informed decision maker is a happy decision maker. You marry the house, you date the rate. So for more information about this in greater detail, if you're just trying to understand what the heck's going on, I'd be more than happy to chat with you. Call me at 330-418-1535. You can text if you'd like, or send me a question, or if you just want to meet sometime and talk, you can send me an email at dominic@dominicfonte.com. Or if you want to see my more than 375 five-star reviews to see what you'll experience working with me and my team, we always put you first. Go to dominicfonte.com.